All right, good afternoon and welcome to the end of day review for today. And today is Monday, August 26, 2024. It is the very first trading day of this week. And this week we have two huge impact news on Thursday and Friday, which is the GDP data and then the PCA data. That's the high impact news right there. And we are in week 35, right? 1 year we have 52 weeks. Actually, we still have some earning season for quarter two. Some of them report quarter two, some report quarter three right there. So we are in this week right here. Excuse us. We are in the final weeks of August, the 5th week of August. 1, 2, 3, 4. Actually 4, but this week is it merged between August and July right there. Half the week is in July, and half the week is fall on August. So, yep. So the two highest MAC new going to be on 29 and 30, which is the GDP data, and then the PCE data. For the FOMC, we don't have any meeting on August, but they will have on September, right there, and it will be announcement for rate cuts. That's what all the new and all the bursts, the noise that indicate that's the case. All right, so go into the price action today. So here's the price action on a 15-minute right there. But here's the here's the screenshot we got before the open today. So we got about 30 minutes before the market when you see that it looked like gonna be another day up right there. You see that it go that direction, but something happened. Right, it's flipped. It's very it's very familiar with the setup ICT. It's not exactly, but the idea that it take out the London high, and then what else? You see, it's similar right there, and then the prior day high, and then boom, it just reverse. So it's similar to the setup the ICT have. So here's the model. ICT have model 1 and model 2 right there. Like those two models, it kind of happened today, but it's not exactly. The reason why is the yield swing is not really strong, but it's just a very quick move to grab liquidity and then it reverse. So it's not really a rally or a sell-off at 9:30. Similar right here is it take the buy side of London before 9:30. It not really, it did, it not really go there. It's only a little bit at exactly at 9:30. It just flip and then boom, it's reversed. So it kind of the setup is similar, but it's not exactly. Basically, it have a liquidity rate right there. In this case, is the buy side, right? Right at the 9:30. So, but the coincidence or the reliable of the setup today is pretty much very reliable. We see the London, the open range right there at 18, right on Sunday. New week opening range right there and London right there. So see that the London rate, what, rate the Asian, right? Actually, yeah, late the London rate the Asian high, and then 9:30 it rate the London high, and also rate yeah, it rate the London high, because London already rate the Asia and the private day high rate there. You see that, and then it's reverse. It's a beautiful setup right there. We did short right here, but we mess up right there. We make a very blunder right there on our end. So that is that is the setup for today. So basically, it's a liquidity rate right there. You move right there, you see that right that, and it did come down at this level. You see that level is the weekly level at 56.26. So if we look at the weekly, you see right there that the level it break, and they're gonna retest it level. So for this week, we're gonna see how it's gonna react around it level, which is 56.26 right there. If it really a full breakout at this level, then you're gonna see basically we want to see that this week it will close above this level with a wick right there, and next week, boom, it's gonna reverse. That is the scenario for a short setup. But for a long setup, we want this to be this wick close all the way here. So you see that it break and reverse, then it's gonna make a second leg up in terms of the weekly candle right there. That's the weekly candle right there. Okay, let's do some documentation right here on this setup. So exactly at 9:30, you see that. So you have Asia, you have a London, right? And right here we see the reverse 9:45. But you see right here, test one. You see 1, 2, 3, 4, test below 5, and then break, and then it reverse. We should be right there with a buy stop, but we didn't execute well right there. We know it, but we kind of not reading right. No, let's go with the 9:30 time frame. So basically, and whenever you see this break, reverse, watch for the liquidity sweep, and then it flip. That is one of the signal that we observe, and we saw that phenomenal right there. So basically we have the liquidity rate right here. So it's the Asia, right? You have Asia, and then you have a London. And then you have a 930 right there. It's a liquidity sweep right there. So basically we have so right here we have the previous day high, excess liquidity, and you have a Asia high, which is okay. It's the buy sell liquidity. And the buy sell liquidity. And then we have a London. And then we have London high, buy sell liquidity, and you see that the 938 rate, all this buy sell liquidity, I think right here. Yeah, it's a buy sell liquidity. So basically we have we can call it ICT liquidity rate, because it's mixed between model 1 and model 2, so liquidity rate. So how do we say that? So basically we have a London right. We have London checking the Asia high and previous day high, and then we have the 0930 checking London and then reverse. So that's the setup right there. So basically we're gonna have a basically a 4 breakout reversal type 2 at yeah, at the previous day high right there, which is 56.6225. So that's the 3-step we have right there. Of course we have, you know, the normal one, right? You just have break, right? The A's are, let's say first is break, retest. You see the test right there, a couple of times right there. Okay, let's work this a little bit better. So the first one, we have the test. This guy from below, and how many times we see we count right there at that level? We have 1, 2, 3, 4, 5. 5 times, you see, and then you have the break, which is exactly 0930 break it. Plus with a buy sell liquidity rate right there, and then we have a reverse at 0945 right there. See that? And here's our note right here. So the note tells us that the London high take our Asian high. And then take our London high 930 right there. So we take our liquidity buy side 3 times. 1, 2, 3, boom, it reverse. And it create the set of so-called type 2 reversal. Right, we have type 2 reversal set up. Type 2 reversal setup. So it basically is a 4 breakout setup. You see that? And reversal type 2. But it's blend with the ICT concept about liquidity rate right there. In this case, we have the 930 rate, the buy side liquidity of the London, and it rate the Asian also, and then it also rate the previous day high right there. So just right here, it's not exactly a it's blend between the model 1 and model 2.1 right here. So basically it rate the PM, right? PM low, which is all in this case, in our case, the PM high right there, which is it did, and also rate the London right there, and then it's reversed. So it's not exactly this model, but it blend the concept. That's the reason why we give the verbiage right here, which is the ICT rate for reversal type 2 right there. The type 2 is mean that it tests, it break, and then it reverse. Let's look at what we have right here. This is the beautiful draw we have. So basically we have 2 types of reversal. So basically a 4 breakout. So it's 4 breakout reversal type 1 and type 2. We just simplify so it's easy to see. So the first one we have is very common, and it's very high quality setup, which is you had a break at the level right there. You see that the previous low, or is a high time frame level, it break and then it retests from below, right? Below or above right here. All right, for the short setup, the retest gonna be below, but for long setup, the retest gonna be above because it break the previous a high or a high time frame level right there. It break and then it tests above and then it reverse. It break, it tests from below and reverse. So that's called type 1 right there. This is called 4 breakout type 1. And then you have another one is called 4 breakout type 2, which is the setup that we have at 9:30 or 9:45 today, right? So we will use this beautiful draw right there for our we get entry, or we get executed trade right there. So to keep in mind, there are 2 types of reversal, but there are many many derivative or variation from this, but this is the 2 key type right there, and we simplify that. It's easy to see and identify and get engaged when we see this setup, right? So the type 2 is quite a little bit different than the type 1. Basically, it tests first, it break, and then it reverse. See that? It tests first, and it break, and it reverse. Keep in mind, the test can be happen many times. If the test happen many times, then the reverse is gonna be very strong. Just that what we observe. So basically, you have two types right there. Okay, now go back to here. We have type 2 right here. You see the key level, high time frame, daily high time frame, right? We have the previous day high right there, and you see the test from below. Test 1, actually right here, 1, 2, 3, 4, 5, break, and then reverse. You see that? You see the huge buy side liquidity right there, right there. The huge wick right there. Give us a signal to go in and go long. Sometimes we mistake, and this can be a test from below, right? And then what? Break it. But that is another setup, but it's not happened this time. So another confluent factor we have is that it rate the London rate the previous day high, and then 9:30 it rate the London high. So they here is just liquidity rate. It's not gonna break this level. So that is a 4 breakout at this level or at this level right here at 52.62 right here. You see that? Test, right here we have 9:30 right. Look at the 9:15. It tests from below. Before that also test from below. Right? Break it and then reverse. If we watch in the real time, we thought it's gonna be a real breakout, but actually it flipped. It turned on a 4 breakouts, and this is type 2 right there. Let's look again. We see the type 2 right here. You see that? It tests, it break, and then it revert. You see that? That's the simplifier right here. But in this case, in our case, we have a test from below 5 times. You see? It tests from 5 times right there. And then the 9:30 is just break the buy side. So you see right here on the simplified version we do have the rate, the buy side, you see. So the step number 2 can do a liquidity rate, or step number 3. The perfect scenario is this one. You want the reverse rate, the buy side liquidity. So you see that it keep rating the buy side liquidity, and then boom, it reverse. That is the perfect, that's what we call simplify right there. But in this case, we have the break already rate the buy side. So this candle don't have to rate the buy side again. So that's the very key distinction that we need to make so we can engage. Because sometimes we just wait, at a novice trader, we say, oh, I wanted to rate the buy side. It did. And then say, okay, I wanted to rate the buy side one more time. It don't. You will late for the trade. Because this guy, the break step number 2 is already rate the buy side. So there's no reason for this to go and rate the buy side again. So if you wait for that signal, you will miss the trade. That's basic, very simple like that. And we can target right here, at the PM section right here, PM low. Yeah, you see the PM low, you can target exactly PM low. You see, as soon as it break out the PM low, you see that it bow back and then make another leg down right there. So it's a very typical scenario. It's happened, very common, especially on Monday. You're gonna see it trade a lot, which is rate the previous day high or VP low, and then it reverse. So that's an idea right there. Okay, so and right here we have a 2 beautiful trade right here, which is a 4 breakout. Right here you see the level. What does it look like to you? It's a type 1 reversal. You have right here type 1 reversal, and you can target at the fair value gap right here. Target gap right there. You can read that, and we did engage that trade. We will show you later. And here, right here, you have another one. So we take advantage of this. This is a reversal type 1 right there. You see that? It break. Let's pick this level right there, which is the, you know, this level from the previous day, or you simply use this level. You still see the setup right there. You see that? It break, it retest and reverse. The same right here. It break, it retest, and then it's reverse. So it gives us, and we aim for the failure gap right there. You can pull half failure gap right there. You can get out. Same right here. It, you know, it's gonna refill the failure gap. Basically, it's gonna be failure gap. So put the target right there. You have a nice run right there. It's 100% right there. This curve setup is, you see that? It wait for this break. You see, break the level, break the level again. You see that? Break the level again. Last time it did not break. It's break the level again. You see that? You can use this level. You can see. Look at the model. Type 1 right there. You see exactly. It break that level, pivot, you know, low right there, break, and then it's so-called test from below. In this case, long setup, and they reverse. Exactly right there. You see that? Let's mark this low. Right? Exactly happen. You see that? Is break, it test from below, and then it reverse. The same story right here. If you mark this candle or this candle, the same idea. It's break, retest, and then boom, it reverse. All right, let's take a look at the trade we took right there. All right, here's the trade we go long here at 14:45, right? 14:45, that means 2 p.m. 15 Eastern time. You see that? We engage right away. We're going, we know that it rate the buy side right here is the turtle soup right there, and it fit into the break, retest, and reverse. So we engage very early. We know we engage early. You see that? Boom. We move out a little bit. Right. Boom. Right. We go in. We add more contract. You see that there? Yeah. It's not perfect entry when we add the contract. You see that there? And look, we add contract. As soon as we add a contract.
Order filled.
Yeah, you see that as soon as we add 10 more contract, it go against us. A little bit scary right there. You see that? If we end right there, we'll make another 1,000 more right there. But we kind of entry too a little bit early, but it's okay. It's gonna hit our target. You see that? We put in the failure gap high right there, and it hit it. Boom. You see that? Yeah. So we in the trade only 19 minutes right there. We get 3,400 right there. Boom. That's it. Yes. That is for breakout type 1 right there. You see the model right there. Perfect right there. So let's see the trade before that. We check the trade before that. Okay, here's the second trade we take right here. I think we yeah. Okay, so we short right here. We make some error right here. Boom. Is that right? We short them. No, I think we go long. We saw the flip right there. We go long. But we get stop out. Yeah, here's is we go long. We thought this guy gonna flip, so we go long. It's okay. We just try one contract to try out. It's okay. So then it go further out. You see, it take it out. That's fine. Perfect. No problem. And now see where the magic happened. You see the break, right? You see it's gonna break this candle, the low right there. boom, and it retests. You see the retest, you're gonna see retest. Yes, we're going right away because we know that you see the buy side liquidity with just right there, and it flipped right there. You see that? It flipped, and it rate the sell side, accused we say sell side, not buy side, and it flipped, then we go in early right away. We going, wow, we see right there, we add the contract, but it go back again as we're a little bit nervous right there, but we still stay in the trade. And as soon that we saw is this setup, you see right there, it break and test from below, we go all in right away. We add another 3 contracts, so it's going to be 14 contract, almost maximum. One more contract, we hit the max right there, and then we put right there at this level, and we know that it's going to hit that level. You know why? Because that's the latest level that it failed to break. It's going to retest that level. You see that high? It just rate the buy side and it failed to break the level. So we put right there. And then we adjust them. We put right here. The last low right there that it break. And you see that? Boom. You see it touch exactly that level. And we're good. Oh man. Just see that? Exactly we need. So yeah, that's 2 beautiful setup right there. We're going in good right there. All right, thank you. Gotta go. So thank you for your time and interest. We're very grateful for this opportunity. We do what we love, then success come our way. So day by day, in every way, we're getting better and better for sure. Thank you and have a great evening. Talk to you later.